The Dow's down 60. The S&P is down 3. As you know, Jason and I are fans of the metals. Well, we got another big fan of the metals coming up, David Morgan. David, how you doing?
Doing quite well, thank you.
David, silver is, in particular, we've had about a 27% run off that bottom during the holidays. Is it too late? Wait for a consolidation? Jump on? What would you do?
Yeah, it's always a tough call, especially in the silver market, in any market, of course, but silver in particular. I think we're still going to see more upside pressure. We're almost at 34 right now as we're doing the interview. Probably got a couple dollars left. I'm looking probably to see this thing go to 36-ish, maybe 37. However, at some point, it's going to run out of momentum, and it's probably going to fall back. Whether we get below 30 or not remains to be seen. I give that about a 50-50 chance. What I would like to state is that I called the bottom ahead of time, and I'm not sure it's the bottom yet. No one is. But well before it touched the 26 level, I had forecast that that's about as bad as I would see it. And we've actually tested that level 2 times, and both times that level was tested, there were very, very few trades that took place at that low level, those low 26s, and it came right back up, rocketed back up, in fact. So that's a clear indication of strength in the market at that level. In other words, there's not a whole lot of $26 silver out there. Any amount is being scooped up rapidly. So right now, that could be it. There's a lot of people that say other things, that it could hit in the low 20s and that type of thing. Again, no one knows for certain, but the way the market's acting right now, I'm pretty pleased with its performance from the beginning of the year and over the past several trading sessions.
David is a fan of the physical metal. There is that spread between the spot price and the actual coinage. We call that, is that a minting premium? I mean, what do we refer to that $1.50, $2 that it costs you to actually get it minted?
That's right. It's the mint, but in the minting process, of course, you got to take a bar, you've got to melt it down, extrude it, stamp it, and then package it and retransport it. So there's a lot of things involved in the minting process. So it's not just the cost of taking the metal and stamping it out, so to speak. You've got to there's quite a process. I've been through a few mints in my life. One over here by me, the Sunshine Mint, and what was intriguing to me is that they take commercial bars, 999 fine silver, 999 fine silver, and they actually put about 3 cents worth of copper on top of it. And it doesn't really dilute the 999 fine ranking, and I'm just guesstimating about 3 cents worth, but a very small amount of copper. And they do that to make it a little harder. Silver is not nearly as soft as gold, but it actually helps through their process. But they had to melt it and then extrude it, et cetera, as I just said. So there's quite a process to making a coin from commercial bar form.
All right, so let's take the U.S. Mint's operation in a Silver Eagle, and we saw Spot get down with a 26 handle, but those several Silver Eagles were shipped out a couple, $2 or $3 higher than that, correct?
Well, that's right. First of all, there's a little bit different process on the Silver Eagles, the U.S. minted silver rounds or silver coins. And that is that, again, the Sunshine Mint is one of the mints that's approved. And all they do is make planchettes, or commonly referred to as blanks. So the process I just described, and what they do is they get a nice shiny silver round with nothing on it other than the edge and the correct weight. And then those blanks are shipped to the U.S. Mint, and then the Mint presses them or stamps them. So it's sort of a two-step process. In other words, if the Sunshine Mint was actually minting U.S. coinage, and they're not, but if they were, it would eliminate extra transportation, extra time, and extra shipping. But because of that, these coins are at a larger premium than, let's say, something else produced by the Sunshine Mint directly.
Now, if, let's say, silver does get back down to 30, what would someone typically pay per coin for a Silver Eagle on a monster box?
Well, there's a set price to the dealers, and I'm not sure what it is anymore. It's gone up. Not too long ago, it was like $2.60, I think, was the minimum. So it was spot plus $2.60 for the dealer. Well, he's not going to sell it to you for $260. So he's not going to sell it at $32.60 to $30 silver price because he won't make a dime on it. So he's going to add, if you're buying a huge amount like a monster box, he might add 50 cents per coin. So it might be 310, so it'd be 33.10 or something like that. I'm giving you rough numbers. You can check with some of the bigger dealers. Most of the secondary dealers that don't have the financial clout to buy directly from the mint get in the secondary market. They pay even higher, and they, of course, have to make a profit as well when they sell it to the public, and the spread is even greater. So it's not my favorite coin in a way because of the premium being so high, but on the other hand, there's a lot of people that have a trust issue, and they want something with a government stamp, be it Canadian silver maple, a U.S. silver eagle, something out of the Australian mint, something out of the Austrian mint, or whatever.
Well, the reason I'm having this conversation is your typical person, they might hear $30 silver, and when they go to buy it, the guy tells them 33. I'm trying to lay out why that premium is in there, and it has less to do with the premium. I mean, people got to make money, but more of the impact is the minting process.
That's absolutely correct. I'm glad you're going through it. Not many people think about it. They see a spot price, and you can buy it at spot plus a little bit of handling fee and a little bit of shipping costs, and what you'll get is a 1,000-ounce commercial bar, and that's the product that you see on the market. And the product that they want to buy is a different product. And as you did such a good job of explaining that, look, it's a different process, it costs more, and here's the reasons why.
Okay, now, so we've got like a $3, using round numbers, premium on a Silver Eagle. That premium, does it stay with the coin? In other words, when the spot's 40, is it 43?
No, that's the drawback. I mean, I have to give you a two-part answer. Sorry, but I want to be very truthful here. On the sellback, you usually sell at spots. If you go in with a 1-ounce round produced by the Sunshine Mint and a 1-ounce Eagle produced by the U.S. Mint, and you take them to a dealer, he's probably going to pay the same price for each of them. He might give you a little bit more on the Eagle, but that's doubtful. So the spread doesn't maintain on the sellback. However, in some Eagles, the mintage was so low on that particular year that some of those carry a pretty good-sized premium because they're now in the coin collector realm, so to speak. So I just want to be a little bit careful in my answer. Someone might come back and say, well, David, you said that never has a premium, and I've got a 1998, and that has a huge premium on it, blah, 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 blah. But generally speaking, no, the premium evaporates on the sellback.
All right, so someone who bought Eagles at the bottom, and we've had a 27% run off the bottom, is likely to be up about 18% at the moment.
Something like that, you bet.
Okay, so now let's carry this conversation to the next, probably one of the more popular ways of buying it, the junk coins. Now, we've got still quite a bit of spread between a premium for a Morgan.
Correct.
Oh, all right, and then I think the Morgans are commanding or upwards around, let's say an XF Morgan, or what, about 28 times face right now to buy?
Right.
Okay.
Something in that range. Depends on the dealer, but in that range, yes.
Yeah, we're a junk Kennedy half or Franklin half, 24 maybe times face.
Mm-hmm.
All right, but when you go to sell them, you really, I mean, unless you've got a truly numismatic coin, that premium also disappears.
Right. Well, my favorite purchase in the junk bag area is not halves or dollars. It's the quarters or dimes, and they usually sell at a less than melt value. So that's actually one of your best buys, generally speaking. Now, there are times that you don't want to get near that market. As an example, during the Y2K scare, if you'd bought like a year or two earlier, the premiums on bags was like 40% because they were very scarce at that time. So there's opportunities in that market if you're awake and aware. You could have taken those bags, sold them at the huge premium, and they did hold the premium because the market was so hot. And then taken that and turned it into, let's say, bars and captured maybe, after paying the commission type of thing, you might have come out with another 35% more silver just by transferring a bag into a bar. But generally speaking, quarters and dimes sell at a discount to the melt value, so it's your best buy. Dollars have always carried a premium, and I think they always will. It does vary, as you said, but normally the dollar market, there's so few dollars that are around anymore that they carry a large premium.
Boy, they sure are pretty, and they're fun to throw out on a bed or a desk and run your fingers through them. Almost worth the premium.
Yeah. Well, a lot of people believe so. That's why it's there. I mean, markets are pretty efficient most of the time. Not always, or we couldn't invest. But you're right. There's a huge demand for dollars.
All right. So, I mean, the point I wanted to make to your novice silver investor, somebody new to the game, is the spot price is not what you're going to be paying if you're buying Eagles, halves or quarters or dimes. But now you're saying quarters and dimes, you can actually find it below melt value. But it is the price that you will receive when you go to liquidate those positions. So there is a built-in spread that you have to overcome to be whole and to be in the money on the purchase.
That's correct.
All right. Now, suppose, just for round numbers, you've got $1,000 or $100,000, just $1,000, and you've spent $500 buying Eagles, halves, quarters, and dimes. How much of the next $500 would you put in those same forms of silver, or would you now move on to buy bullion bars?
I usually go to bars, but it's an individual choice. I mean, a junk bag is fairly cumbersome. A full bag is $1,000 face value. Weighs, I think it's in the 60-pound range or something. And that's kind of your survival coins. I like the small units, easily recognizable. There's a lot of advantages to it, but I think bars is the way to go. I think both. I really believe you should have both. If you're only going to make one purchase, I think it'd be a junk bag or a junk half bag, something like that. If you're going to continue to accumulate, I like to go to bars.
Well, David, tell us real quickly, if somebody is interested in learning more about investing in silver, where can they go to find out more information?
Well, you go to the website. It's themorganreport.com. It's themorganreport.com, all one word. And I've got a lot of free information. I'll give you the 10 rules of silver investing for free, and we go through some of the issues that we've been discussing today.
You got a great video up there right now about the future of silver for the next 10 years. I would urge everybody to go on to themorganreport.com and check that out.
Thanks
David,
so much.
we appreciate it. I wish I had an hour to talk to you today.
Oh, thank you. Well, we'll be back soon. Thank you.
Have a good weekend.
All right. Bye-bye.
This is Alan Butler. Jason and I will be back on the other side of this break with Big Al Corlin, out there in the Pacific Northwest. He can see Canada from his house.